Now let's be real, 2022 was a challenging year. You've got interest rate hikes, high inflation, yields skyrocketed, the US dollar was going absolutely bonkers, and yes, stocks were in the tank. So whether you're a short-term trader or long-term investor, more likely you learned a lot from this trading year. So let's discuss a specific strategy that could be key not only to getting off to a good start to 2023, but giving you an all-round trade into next summer as well. And it'll be smarter than most economists are even thinking and give you a bit of an edge going into the next year. So when the Fed started raising rates back in March, all the way back in March I should say, the market changed. Now, no one expected the most aggressive hikes to take place since 1994. Fast forward, 6 straight hikes in a row, an unprecedented 4 straight 75 basis point hikes coming from the Fed. In doing so, they provided day traders with one of the best short-term opportunities in the market that we've seen in years. So what this is about is almost every single major economic release in the second half of 2022 has led to wild moves in the market. But this has given you a huge opportunity for fantastic trades. So the key is in 2023, expect no different. Yeah, we may see them slow the pace, that's the Fed, of these rate hikes, or even pause altogether. But rest assured, the market will still remain very, very sensitive to key economic releases. Can you imagine if inflation goes and ticks higher again next year? Okay, so we know what we're looking for, but let's break it down in a trade. Set aside macro and political viewpoints and all that good stuff, and we'll look at these releases from a trading perspective. They're quite simply breaking news trades. Where and how you execute your position is the proprietary part to the trade. So a breaking news trade is just something that provides instant extreme volatility as algos always digest what is happening, which gives outsized moves as the algos immediately react to that news and place trades accordingly much faster than humans can do. This may seem obvious, but is arguably the most important fact to these trades. Do not feel that because you missed the initial move that you've missed the trade. The types of examples we can look at that work best all have one thing in common. There is always a follow-through to the move. Now, the November Fed decision provided an excellent two-way price action trade. Initial move higher at 2 p.m. was a release, followed by a brief pullback, and then follow through to new day highs before the 2:30 press conference that started and sent the market sharply lower. As traders, we can treat these two moves as completely separate trades. Here are a few key factors to consider why these trades will continue to be available and work heading into the new year. Number one, the Fed's not there yet. Remember, the past few rate hike decisions have seen the Fed Chair Powell time and time again suggest the ultimate rate they need to go to will be higher than most expect. Most Fed officials have suggested this rate could be somewhere between 5 to 7% for a terminal rate. Current Fed funds rate sits at 3.75, 4 to 4%. At the time of us filming this, we're actually even looking for another rate increase of about 50 basis points. So we're not there just yet. Number 2. Inflation is still bad. Yes, the Fed has made some moves here, unprecedented rate hikes, 75 basis points 4 times in a row, but in November, we saw inflation drop for the first time all year, and it's still very high. Now remember, when target inflation is 2%, we're sitting at 6.8%. There's a long way for inflation to come back, so volatility is not going anywhere. 3. The amount of damage done already to stocks in the overall market will take some time to unwind. Even as inflation comes back under control, we'll have opportunities the opposite direction from these same releases. Some 2023 overall market predictions from analysts are already out, have the S&P basically flat or slightly up or down for the year. Given the severity of the sell-off we saw in 2022, this would be a very, very healthy outcome. As we head into a brand new trading year, make sure to review and sharpen up on how to trade economic releases in 2022. 2023 is set for more of the same opportunities in volatile markets. As always, make sure you back test any strategy. Plenty of data for 2022 on these economic releases before you put any real money into the live markets. And do not forget, join us daily live on TraderTV.Live, 8:30 every single morning, and grab our free watch list sent directly to you each morning before the open.